Biggest loss that I've ever witnessed in a single trading day, $500,000.
Richard Wynn, a man who's seen markets rise and crash. For over 35 years, he's lived at the core of global finance, from brokerage and investment banking to the high-stakes world of trading. From London to New York, Dubai to Hong Kong, Richard built a network that spans continents, mastering the markets and the minds behind them.
I've seen people affected by substances that I had no idea they were even involved with, and they lost everything, their houses, their wives, their jobs. And I sat next to one guy for 10 years. It never even occurred to me that he was involved with that kind of thing. It destroyed his life. He would initiate a position versus one of the major currencies of $1 billion.
$1 billion?
$1 billion.
Do you think the financial markets are actually fair? Let's be absolutely honest. Oh, they're designed to keep the retail traders losing. When they lose money, they blame the algorithm. Oh, it's the bloody algorithm.
Well, it's true. How much do they control? In equities, maybe about 70% of trading.
70%?
Oh, it's high. What I would say to retail traders is the trend is your friend. Try and pick a trend. You might get burnt if you're just trying to make money over a 5-minute period, because the algo will chew you up and spit you out.
And now with the rise of AI and algorithm trading, which we use at my company, is human trading dead?
Yes and no. If you're approaching trading as a retail trader and you're looking to day trade, is your finger quicker than an algo?
In the last 3 decades, during your time in the financial markets, have you ever witnessed an impulsive president like Trump?
No such thing. But if you look at his aura when he's amongst European leaders, they're like children at school.
Who wins in the next decade, gold or crypto?
Well,
today we're sitting down with a man who's been at the heart of the financial markets for more than 3 decades. He's traded through so many booms and bust cycles, run brokerages, negotiated with institutions, partnered with football clubs and more sports, and even served in the Royal Air Force Army before conquering finance. He's lived turning points of global markets, from trading floors of the 80s before the internet even existed, to the regulatory battles of today. Please, let's welcome Richard Wynn, one of the most experienced voices in forex. How are you doing, Richard, today?
I'm fine. Thank you very much for the very kind introduction. All good. Yes.
Thank you for your time today.
Oh, you're welcome. Pleasure.
Appreciate you. So, Richard, let's go back in time to when you started. What's the craziest trade you've ever witnessed? The kind of story people wouldn't believe unless they were there.
Well, you kind of hit the spot there when you mentioned there was no internet. So everybody was relying on human initiative. And I worked for some pretty big banks back in the day. I was a trader. I was a principal market maker. I took my own positions. So a typical desk, we'd sit 3 to 4 of us and run a current. I ran the sterling book and my colleague would run the Swiss book, the yen book, or whatever. And I can't give you one particular example, but there was always somebody who would make a classic mistake, completely misinterpret an economic announcement. We don't know, the 3 of us, we took advantage of it. We were market makers. We could hold our own position. We knew that signal was sell dollars. So we'd sell dollars. End of story. Take our profit. How much have you made? 20,000, 50,000, 60,000. How much have you made? How did you all make money? I've lost 100,000. Why? Completely misinterpreted the signal, traded the opposite way, and lost all our profits. But that was so common. So common.
And what's the biggest loss you've ever witnessed?
Biggest loss that I've ever witnessed in a single trading day? $500,000.
$500,000.
Yeah.
Wow.
Yeah. And I'd seen that in actually probably even more, because you get unexpected incidents that happen, fallouts in the market. Black September, when sterling crashed out of the ERM. And when the Swiss National Bank pulled the floor from the EU, from its EU range, and it had enough of spending money trying to keep the Swiss franc at a sustainable level, so many people got absolutely decimated and destroyed. Fortunately, my company, we came out of it okay. Brokers went bust, clients lost money. Swiss franc appreciated 30%. That was back in January 2015.
Wow.
The Swiss National Bank just had it was unsustainable to try and keep it at that low level. So put on my books and a bank that I've worked out in a single day, $500,000.
$500,000. And what's the biggest win you guys have ever pulled off?
The other direction as well. You could, absolutely. It was known you could have a swing anywhere between $250,000 and $1 million in a given day in volatile markets. I'll give you an example of where that would happen. and most of it would be by luck. So a very common occurrence back in the 80s and in the 90s was central bank intervention. And back then, obviously, no electronics, no e-commerce. It was all down to
By the telex machine.
By the telex machine. But all of a sudden, there'd be a vacuum. And the most common intervention back then was the Bank of Japan, trying to keep the yen at a low value for its exporters. And it's very, very common that it'd come and intervene. And you knew all the broker boxes. We used to listen to brokers. We had them, Tullets and Tokyos, Pre-Bon, Yamani. And they'd just go silent. And then all of a sudden, the racket, the noise would erupt, and everybody would be shouting, intervention. So the yen would have just moved 200 points, 2 yen in a matter of seconds. If you were lucky that your order book was positioned the right way, or you'd entered it into the right way to counter that yen weakness, then you can make a lot of money. If by no fault of your own, your order book was going the other way, you just got destroyed.
I mean, in the last 3 decades, markets have changed a lot, right? Since when you started, right? And we started during, it was all done by human beings. Yeah, and there was no technology or such. And now, whereas today, everything is done online, where you can keep up with the news. You know when Trump is speaking, giving a speech. You know when the NFP is coming out, the data of the NFP, point. Right? CPI data, you can track the data. You can actually see the forecast. And market has changed. And like, what's been for you like the most dramatic change over the last 3 decades?
It's over the last 3 decades, with the innovation of technology, liquidity has changed considerably. It's significantly better. If we go back to the brokers that I was talking about, the traditional money brokers, Tullets, Pre-Bon, and Beerbaum, they were human aggregators. If that makes any sense. So you'd have the senior broker sitting here in a circle, you'd have his junior brokers taking a line from a particular bank, maybe Citibank, NatWest, Paribas, whoever, and his job was to listen to their interest and aggregate, find the highest bid from his junior brokers here and the lowest offer from there, aggregate those so he had the tightest spread, and then he would broadcast that to the entire interbank market. And we'd all listen to that. And then as soon as one, he'd shout, given, and then the bid would go lower and taken, someone had taken an offer. So then it got slowly replaced by e-commerce, which it's progress. And the introduction of added liquidity from new retail traders. And I think it's really important now that retail traders do understand. They may think they're trading with 1 lot or 2 lot. Their addition of liquidity, it's important. It may be accounting for 10, 15, 20% of traded volumes. Yeah. So never underestimate yourselves as a retail trader.
I mean, when I zoom out a little bit and I look at the market back in the day during your era and now, the biggest change for me is
algorithms.
Right, algorithms and algorithm trading as well. And everybody talks nowadays about algorithm trading, right? Dominating the markets. How do you see these algorithms actually work? And how much are they actually controlling price movements? Because a lot of people say when they lose money, they blame the algorithm. Oh, it's the bloody algorithm.
Well, it's true. And answer the last bit first, in terms of how much do they control. In equities, maybe about 70% of trading.
70%?
Oh, it's high. FX, 50, 60%. So what they're doing, they're drawing in data and information from all kinds of sources, analyzing it, so from stock exchanges, other exchanges, drawing in that data, analyzing it, creating following trading patterns, emotions, machine learning, and they're acting as market makers themselves. Trend following. So a typical old-fashioned trend follower would be as a price of thing is going up, they'd buy and keep that momentum going. So they play a huge part and they're not going away. So I see that market share rising. I really do. Yeah.
And now with the rise of AI and algorithm trading, which we use at my company, is human trading dead?
Yes and no. Depends how you want to approach trading. If you're approaching trading as a retail trader and you're looking to day trade, is your finger quicker than an algo No.
No chance.
So if you try to trade for a very, very short time frame, then as a human being, you're probably not going to do it. So what I would say to retail traders is, the trend is your friend.
The trend is your friend. That's my favorite quote in trading, you know?
The trend is your... Try and pick a trend. You might get burnt if you're just trying to make money over a 5-minute period, because the algo will chew you up and spit you out. It will. So as a human now, if you concentrate as well on event trading, so if you're looking at, so next week we'll have the non-farm payrolls, for instance. They're big, juicy. Everybody likes the non-farms.
It's a casino day.
Yeah, or the CPI. Find out what it used to be. Find out what the previous figure was. Find out what it's expected and plan and look. Now, for the markets to move now, because the liquidity is so much better, you need quite a variation. If it's 25,000 on the downside or the upside, away from the expectation, you're probably not going to get much of a move. 50,000 either way, you get a moderate move. 100,000, you're going to get a substantial move, I would say. Look at event trading. And if I can give you a very good, but it depends how much time you've got to sit and watch the news and the TV. I'll give you...
It's exhausting. Yeah.
It's exhausting. Again, as a retail trader, what time frame have you got? You can't just open your laptop and think, oh, I'll trade. Think about things. A month ago in Parliament, in the UK Parliament, the leading Labour Party need to either cut welfare, cut public spending, or hike taxes. The day before Prime Minister's question time, the Chancellor put a proposal through Parliament to cut welfare spending that was voted down by our own government. So she's between a rock and a hard place. And then the next day in Prime Minister's question time, this is unprecedented, she came in and she was sitting next to the Prime Minister and the leader of the opposition, throwing questions about the economic policies and does the Prime Minister support the Chancellor. She started crying. And she was crying, tears rolling down her cheeks.
Yeah,
and she was
I saw that.
Did you see it?
Yeah, I saw that.
Now, that was an immediate... If you were watching that and you had your...
We saw what happened to sterling right after.
Yeah, bang. Gilt yields up. Gilt yields are higher. She's lost control. That was a very negative thing. She may have been upset for a personal reason. She shouldn't have come into the house.
Yeah.
You know, but if you can spot things like that, or whenever you know President Trump's about to make some kind of statement, get ready and get your finger hovering, because something's going to happen.
Speaking of Trump, you've spoken about Trumponomics in 2025, right? Is Trump really helping traders win, or is he playing a game that could literally blow up the markets?
I don't think he's going to blow the markets up, but he certainly cause volatility. If you look at it from a domestic point of view in the States, with his tax cutting, he's improved the equities markets. There's a lot of flow of cash into US
crypto market as well.
He's pro-crypto. So there's a lot of inflow there. He's very abrupt. He's nothing like we've seen before. In terms of his tariffs, he spots weaknesses. He spotted weakness in the EU and the UK, neither of which were in a position to create a good deal for themselves. He's got fantastic ones with the EU and the UK. All the leaders of the industrial countries of the EU, as soon as the president of the EU did that deal, they said, well, what did you do that for? Well, they weren't impressed. He spots weakness. Now, he just recently imposed the additional 25% tariff on India for buying Russian.
It's very impulsive.
He's very impulsive, but was he specifically targeting India for that extra 25%, when the real offenders are China and the EU? He didn't put any additional ones on there. I think he's using India as the fall guy, while he's still in negotiations over the Russia-Ukraine war. I don't know what he's doing there. He'll probably pull back. But in answer to your question, if you like volatility, then he's your man. If you want to invest in US equities, then I think he's doing a reasonably good job.
Yeah, he's great for business. But in the last 3 decades, during your time in the financial markets, have you ever witnessed an impulsive president like Trump?
No. No such thing. No.
So he's an outstanding man.
Outstanding. I'm not saying outstanding good, but he's a phenomenon.
Yeah, unique.
Never ever witnessed anything like it.
Right.
Nothing. Some might say it's what we needed, but if you look at his aura when he's amongst European leaders, they're like children at school. They're all
You saw that image?
All of them were all sitting
When
there
they came to the White House, they all sat like in a classroom.
sat
And
like
he's the
naughty
principal.
children.
Yeah.
Yeah. And that's bad for the EU. You know, come on, step up and just challenge him, say something. And the same with the UK, our Prime Minister. He's like a schoolboy around him. He's just unbelievable.
Yeah, you kind of miss the old sleepy Biden, to be fair. Because during his time, the market was somehow kind of stable, right? Like, let's say the market was moving 200 pips in a month during his time.
Yep.
Whereas now in the Trump era, literally in 10 minutes, it moves like 200 pips.
Yeah. That's when, if you know when he's about to speak and you want to do some event trading and you can quickly analyze what he's said and how it will impact the market, then you got an opportunity to make money. But yeah, he's not a politician, he's a businessman.
Your resume is very interesting too, because you served...
Royal Air Force, yeah. Do you know what happened there?
What happened?
I'll tell you exactly what happened there. So when I left school, I'm from the northwest of England and there wasn't much going on there. And a lot of the kids that I was with, some joined the Army, the Navy. So I joined the Royal Air Force. And they said to me, what do you want to do? I said, I don't know, you tell me. And they gave me some aptitude tests and they put me in communications. And that meant I was on telexes and all sorts of things and various other aspects of military intelligence. But I was a trained typist. So I could type on a blank keyboard and I understood communication. Anyway, so I was in for 7.5 years. That was my contract. And a few friends had left before and they said, come and work in the city of London. All the dealers, all the banks, all the brokerages have ex-military people trading on the telex machines. So I joined what was then Shearson Lehman American Express and then moved on to a British broker. It became French Credit Lyonnais Rouse. And I ended up as their telex trader. Now, a telex to your younger people is something like email in very clunky form. Anyway, so you'd have the dealing desk here and a big row of telex machines right down the back of the dealing room where all your overseas officers would call for a price. We had Abu Dhabi, Singapore, Kuwait, wherever it was. And they'd go ding, 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 ding. And I had to call out for a price from the spot trader here. And I was running up and down these telex machines, putting prices out. And then if you showed willing and you showed interest, chances were you'd get moved on to the desk yourself to learn how to be a spot trader. And that's what I did. That's how it happened. So it was the ability to type. Wow. Know, crazy, isn't it?
That's crazy. But would you say working in the Royal Air Force gave you that discipline to be a successful trader?
Yes. Do you know what? And not just successful trade, but life in general. I have a routine for everything still to this day. My friends think it's bizarre. I iron my own shirts and trousers. What are you doing? Well, I'm ironing my shirt. What are you doing?
After all these years, still.
Yeah. Or I'll do the whole family's ironing. Yeah. I don't care. It's just, the discipline for everything. It taught me a lot. British military discipline, it's good. It's excellent.
Can imagine.
Yeah.
And what was the first thing you learned when you moved to finance and trading? Was it analysis? Was it?
Oh, well, the first thing I learned was how to make everybody a cup of tea in the morning. You're the junior, you know. Oh, fair enough.
I've heard that the juniors usually bring the food and
we do.
Tea.
That's it. That's fair enough. Well, you've got to learn. Well, we were really big on technical analysis, charting. So again, before there was any kind of screen charts, we physically had a little chart in front of us and we had point and figure reversal charts that we did every time it went up 10 ticks, we put a little cross. When it came down, put a 0. And we had our own charts so that you follow and you sit staring at your own screen, doing your own charts. And then they went on the wall behind the trading desk. So when you had your relief for the next shift, he'd come in and have a look and see where the support or resistance was. So there was a lot of focus in my first trading job on technical analysis.
Technical analysis, yeah. And what would you say, like, the key behind successful technical analysis to master it?
Well, you master it. There are so many different aspects to look at it. I mean, the charts that we hand drew, they were very, very basic. You just knew where some support and resistance were.
So when you had to draw.
Yeah, when you draw, you literally did draw a line up there. And, so if it breaks this level, it should collapse. And quite often it did. But then things became more advanced and more people embraced Fibonacci, Elliott waves, and all the other disciplines, which is fine if you want to do that. But you know what? You speak to a technical trader like that, he couldn't care less what's happening in the fundamental world of trading. If you say, for sat next to a technical trader, I said, be careful, the non-farm pay figures are out in a minute. He couldn't care less.
Yeah. Some traders are like that.
There's no relevance to him whatsoever. So I like to blend the two. I'm an inquisitive person. I love politics. It intrigues me and annoys me all at the same time. But you can't ignore it.
That to everyone, I think.
So I embrace the two, and I see if the fundamentals do have any impact. So I'm open-minded. But
fair enough.
Yeah, that's where I am here.
Just be open-minded.
So always be open-minded. Do your homework. Don't rush into things.
And be flexible.
Be flexible. And learn from your state. Why did the market collapse? Well,
why did they get stopped out?
Why did you get stopped? Well, look, because you put your stop in the wrong place. You use some logic again. Look at the charts. Is that a good place to leave a stop? Not really. If there's a big support area 10 ticks below there, you've put it a little bit too high. Just use some research.
Speaking of people getting stopped out and stop loss, people often blame it on the market or the algorithms. They got me pushed out. They pushed me out.
It can happen, but that's nothing to do with algos. Human beings used to do that as well. If you were a market maker, as I was back in the day, I could have evidence that I'd stopped you out at a true market level that it traded at. But another one would turn around and say, no, it hasn't been that low. But we used to work on a stop bid, stop offer basis. So if you were, let's say you're long of any particular currency pair, only stop me out when it's offered at that price, or only stop me out when it's bid at that price. So there was a bit more flexibility there. It's an unfortunate thing, but again, how you can prove whether you've been treated well or not.
And obviously you've been in the game for 35 years. What's the one thing you've seen behind the scenes that you could never say publicly until now?
Well, why would I say it publicly? Not particularly trading wise. I wouldn't be tactless, but I think it's just generally people's behavior. And for me, if I've had a good day, I'm a very modest person. If I've had a good day as a trader, I might stop at the pub with a couple of friends, but I'm not a big lavish. I've seen all kinds of antics where people have gone out and got up to all kinds of disgraceful behaviour that I couldn't possibly repeat. But yeah, there was that sort of thing going on all the time in the city of London. For me, I'd just go home, keep quiet, and let's see what happens tomorrow. But I'm not going to disclose any. Privately, I will. But I'm not going on live TV or whatever we've got here. No, that would be disloyal to my friends, I think.
Yeah, I mean, we've seen a lot of stories, and there is like a lot of TV shows that they show you how trading floor is being managed, and you see all like the dark side of the market, what traders do off work, what they rely on to keep functioning.
Oh, they do.
Right.
And I'm pleased to say I've never been down that road, and I think I know where you're going. I've seen people affected by substances that I had no idea they were even involved with, and they lost everything, their houses, their wives, their jobs. And I sat next to one guy for 10 years. Never even occurred to me that he was involved with that kind of thing. It destroyed his life. He's built it back up again, but it just destroyed him.
After what?
Yeah. I don't want to say too much.
I get what you're trying to say.
It shocked me. It truly shocked me.
Yeah, because a lot of traders think they need to rely on these things, right, to help them function and perform better.
It's habitual, and I don't know about now, but it was rife 80s, 90s, absolutely rife.
It was very common back
It was. If you've watched The Wolf of Wall Street.
Yeah, and even in The Wolf of Wall Street, right, there is that scene where, what's the actor called name? He won the Oscar.
Oh, Leo DiCaprio.
No, not Leo. The other guy. The other guy who was Leo manager.
It was rife. But then people got away with it because there's no social media.
Yeah.
No mobile phones. And they'd ring home, I'm out with clients tonight, and put the phone, that's it. They ring their wives, I'm not coming home tonight, and I've got them out with the client, and then that was it. It was rife. I couldn't say now because I don't get directly involved with people in that sort of those spaces.
And trading has changed, right? It's not like as
it's more serious,
like in the movies or in The Wolf of Wall Street where people are sitting trading floors. And
no, there's no.
It has changed, right?
There's no adrenaline, or if you go in dealing rooms. In my day, the noise was off the scale, the atmosphere. People throwing phones and shouting obscenities at each other. But then you go in one now, it's like going in a museum. You just tiptoe through. And so have the people. They've changed significantly. All right, the best traders, the guys who could think on their feet, they all came from the east of London. They were just regular working class boys who could think on their feet, made quick decisions
and be creative.
In foreign exchange markets. Anything with a fast market, it was just the working class boys from East London. In the bond markets, fixed income markets, they tended to be graduates because they had time to think things out with structured products and all the rest of it. It wasn't a fast market. But all the brokers, all the FX dealers, none of them had a degree. They were straight out of high school. None of them had ever had an interview in their lives. They all got their jobs because their father knew someone who worked there. Can you have a look at my boy and get him a job? Yeah, go on then. I don't think I had an interview until I was in my 40s. Never. You just go and you knew someone. Oh yeah, you come around to our place, and that's the way it was.
Yeah.
Now, anybody who's sitting in a dealing room, they've all got some kind of degree. Whether it's relevant to the underlying product, I don't know. But
mostly not.
But the mentality, you get a lot of people who their degrees are in some kind of technology space or computer programming, so that the personality of people in dealing rooms has changed completely from wild animals throwing phones around each other to computer programmers who by nature are a little bit introverted.
Yeah, very.
It's changed.
And like what I feel sorry for myself. Like I haven't witnessed and lived your era. Because now trading is it's very lonely.
Oh, very lonely.
I'm just sat here all day long, just behind my laptop alone. And even if I go through a losing streak, I haven't got anybody that I can explain to or talk to or even consult or share like how I feel. All right, you can chat to your mates online on WhatsApp or whatever, but it's not the same as if you're in a trading floor.
Physically there.
Yeah, exactly. Physically there. If you face a losing trade, you've got your mates lifting you up.
Yeah.
Maybe you see something that I haven't seen or haven't clocked. Can you tell me about it on the spot?
100%.
Yeah, and
yeah. But we had all that.
Yeah.
The camaraderie. And if you had a bad day, and you made a mistake, it was unbelievable. You would be shouted at and you would be insulted and you knew you'd made that mistake. But then within 5 minutes, it's gone. You're back to being friends again. But it happens all the time. The emotions and the mood swings were phenomenal, but they've all gone. But that's, it's evolution.
Part of the game.
What can we do?
Evolution, right. Evolution, yeah.
Yeah, evolution, not revolution.
Evolution, not revolution. Yeah. And a lot has changed in the market in the last 3 decades. Speaking of which, regulations.
Yep.
Right? It's becoming more and more strict.
It is.
Right? Like back in the UK, even here in the UAE.
Yeah.
So my question actually, do regulators actually help protect retail traders, or they're just protecting the big institutions, in your opinion?
I think they do. And I think their job, their principle of the Financial Conduct Authority, the British regulator, the FCA, the principal role of them and all the other regulators is to protect the consumer. Now, what they've done, in terms of, if we take the CFD industry, the FCA won't say it as such, but they don't like it. So all FCA brokers have to display a banner at the top of their screen.
Disclaimer.
The web disclaimer. 50, 60, 70% of clients lose money with this broker. So there's your first warning. Now, what they also do is relatively low leveraging. For the majors in ESMA in the UK, it's 30-1. I think with ESCA, it's 50-1. And they also have negative balance protection. If a client is just losing 50%, bang, the broker closes him out. So they do. But they've also recently brought in an act called the Consumer Duty, which is imposed on anything retail, not just our business, but for mortgages, for any kind of financial instrument that the retail market gets involved with. And it puts huge pressure on brokers and financial entities that they must deliver a good outcome to the consumer. So there's a lot of pressure there. The predecessor to the FCA was called the FSA, Financial Services Association. And what they did, they were reactive rather than proactive. So the FCA, they are constantly getting data from brokers and financial institutions to check it's on a daily basis through daily reporting to make sure that everybody is still solvent and operating within their means, which is a good thing. However, as a trader, you may feel that you're somewhat restricted by relatively low leveraging, which sends you offshore. And if you're trading in the Seychelles or Mauritius or wherever it is for 500-1, you don't have any protection as a British citizen. So inadvertently, the regulators may be pushing people offshore rather than, there's a fine balance.
True.
That's what I feel.
Yeah, I think that the same. I think the same as well.
Yeah.
Because people are going to offshore companies because they cannot do certain things with the local companies, right?
Yeah. And then when the brown stuff hits the fan, then who do they go to?
Exactly.
Yeah.
Exactly. You've just mentioned about this disclaimer that brokers do, like 60-70% of retail traders lose money. And it's actually so true. The financial market is extremely demanding, extremely difficult. And the question is, can people actually be wealthy of FX trading and CFDs trading?
Again, go back to the points we were making earlier. How much, if you fancy trading, it's tempting. Think about what knowledge do I have? What do I really know about trading crude oil or trading commodities or trading foreign exchange? And the answer is most retail clients, they don't have much knowledge at all. So before you do it, do some homework, get some education. There are all kinds of seminars that you can attend. A lot of brokers will provide it. They won't give you advice, but they'll tell you how to approach a trade, how to place a stop loss, how to be disciplined. There are chances to make money, but go back to the earlier bit, be warned, you're up against the algos and AI. So is your human brain going to beat those guys? You know?
That's the real question.
Yeah.
And let's speak about leverage trading.
Yeah.
What's your views on it?
Clue number one is don't over leverage yourself. If you've made your first deposit with a broker and you know that you can, let's just hypothetically say, you can have a net open position of 10 lots, let's say. And you've had a good look at the gold chart. You think, gold's going up, I'll buy gold. Well, don't buy 10 lots on day one. There's your first mistake. Average into it. Only average into a winning position. So I didn't look at the gold price today, but let's say you buy 2 lots, it goes up a little bit, buy 2 more, goes up a bit more, buy 2 more, and trail a stop loss.
Trail your
stop loss as you carry on averaging. And make your intentions you want to make 3 times more than you're prepared to lose. And if you stick with that discipline, you'll be okay. Never, ever average a losing position. I've seen it so many times. People say, the price has got a bit cheaper. I'll buy some more. Well, no, you're going to lose a lot more. So just use your discipline.
So psychology is really important.
Psychology.
Because I've seen a lot of people, they get stopped out because they start averaging into losing trades, just like you said, right? And all not based on real data, but based on pure emotions. The price is going to turn around. Please God help me.
I've seen institutional people do that as well. So they're not alone. You're right, 100%. It's psychology. Psychology, and you've got to teach yourself. And if you lose money, just close your laptop, go and have a cup of tea, and
Go for a walk.
Go for a walk. Don't worry about it. Start again, and just approach it with a rational, sensible reason for doing it.
Absolutely.
Yeah.
From your time as a CEO, what was the toughest decision you had to make, where millions were on the line?
Well, there were millions, and I'll take you back to 2008,
Oh,
2009. At that particular time, I wasn't CEO, but I was head of institutional foreign exchange for a very large company. And I had one client. He was an ultra high net worth individual. Oh, and I'm talking ultra, very, very high profile global entity. And this person so again, I go back to the point, I was a principal trader, so we made our own, we were market makers essentially, and we laid off in the market what we want, or we internalize it, whatever it was. He would initiate a position versus one of the major currencies of $1 billion. He'd have $1 billion. $1
billion?
$1 billion.
Wow.
So before ecom, $1 billion. Now, I was his point of contact. We'd had to massage this into the market very gently over a period of hours. You can't just pick a phone up and go, quote me $1 billion versus the yen. So we just massage it into the market very gently. And then what he would do when we'd finish the trade, we'd average it and tell him his final price. Then he converted it into a financial futures contract, and we would post it onto the Chicago Mercantile Exchange for him. And he preferred to hold his positions in futures contracts, which was fine. That's what we did. It was our business. Now, the volatility at that time was awful. A lot of brokers were running short on funds. And the nature of my client's business was he couldn't, and his position started losing money, which was fine. He did that. But he couldn't support that instantly. It always took him 2 days to get the funds to us, which meant we as a broker had to fund it for him on the Chicago Mercantile Exchange. And my directors said, we can't afford to do this, chop him, get rid of him. I said, you get rid of him. He's been our lifeblood for years and years and years. He's never failed to pay his money. It's just a slow process. Couldn't afford to finance it, so we had to close his position out. That was the end of that business. I got to know the guy very, very well. I was absolutely mortified. So that was instantly, that was him out, and that was our potential earnings of multiples of millions for years to come gone.
How much he lost when you guys closed?
On that, he would have lost maybe a couple of $1 million, which to him wasn't a great deal, but it was the end of that business. So yeah, it was catastrophic.
So what I get from this, brokers sometimes have the right to close clients out.
Oh, they do. Yeah. They do. Absolutely. If the client doesn't support his initial margin and with top up, then the broker has the right, if you don't have the money to support your open, if your margin call, if you can't put the additional margin in, it always depends on your relationship with the underlying client. If you know he's good for it, different brokers will have a different approach. Depends how you've set his leveraging.
So finding the right broker who actually can help you is key in this market.
Yeah. But this is going back before PSPs. This was very old-fashioned.
I get that, but still, like I've tried many brokers. I've been in the market for 10 years now, right? Not as long as you.
It's all right.
Yeah, but and I've tried many different brokers, and sometimes with brokers, they've got their dirty games. Yeah. Some of them do.
Some do.
Spread manipulation. Price manipulation. Sometimes, like on the market opening, out of nowhere, they just widen up the spread so they can get you stopped out.
It's naughty, but it's nothing new.
Yeah, and it happened to me a few times with big brokers. I can't mention names.
No, that's okay. Nor will I. But it's price manipulation, and particularly knowing what your open position is, and making it virtually impossible for you to exit. So
let's speak a little bit about the market. And now with the rise of crypto and gold, I think gold is going to continue to go higher and higher. I mean, every year it has a new cycle. Yeah. But for the Gen Z and for the young traders out there, who wins in the next decade, gold or crypto?
Well, again, I think that's down to your risk appetite. and what period of time you want to trade.
But let's say if you had $10 million in store,
Yep.
where would you put it?
Gold for me.
Gold.
For me. Maybe it's because I'm an old person. I don't know.
Old school.
Old school. No, look, gold is a tangible asset. And there's there are a lot of reasons why it goes up or down. The physical demand for gold, it's not just because of its speculative attractions. There are a lot of commercial attractions for it. Your phone has got a 0.03 of a gram of gold in it. Your laptop will. The commercial demand for gold will always be there. And another thing, particularly electronics, supply and demand. So there's only a certain amount of gold left in the ground, but it is a tangible asset, and it's got a lot of fundamental reasons why it's going up or down. Crypto, there's nothing behind it really, is there?
We don't even know the founder.
Exactly. You don't. Well, we know it might be some Japanese guy, but
Yeah,
So
that's a made-up name, by the way.
yeah, I know. Unbelievable. So yeah, it's great. I mean, but again, what time period? If you got any in Bitcoin when it first came out, it's great. If you can remember all your login credentials, and you hear all kinds of stories that one guy lost his laptop and it ended up in the council trash somewhere, and he couldn't find it. But for me, gold. I mean, less volatility as compared to cryptos.
But we've seen now when Trump took over the White House.
Yep.
We've seen now like investors are turning away from the dollar and they're trusting crypto more and more. Not because Trump is a pro crypto, but also they feel more safe keeping their money in crypto.
Yeah,
and not in the banks. And because, you know, the US, they've been printing trillions and trillions of dollars, right?
Yep. As have the EU and the UK.
Yeah.
Absolutely. Yeah. It's a good point. Well, if there's a run on banks, again, and I sincerely hope there isn't, then yeah, crypto is probably a pretty good place to have your money, as with gold. But again, risk appetite, what can you sustain in terms of swings and volatility? But maybe I'm old school, but I like gold.
No, I get you. I like both, to be fair.
Yeah.
Is the US dollar dominance in danger, you think? Oh, will no currency ever replace it? We've seen
not
BRICS.
yet, but if you think about that,
I mean, it has lost over 11% of its value this year alone.
I know.
Even though Trump just came back to the office and Trump is good for the dollar, but some people saying like all the impulsive speeches he gives out there just to crash the dollar so he can pay the debt.
That is very, very true. that is a very good point. But if you say it is the dominant currency of the world, but where's the competition coming from? The only area I can see, and they haven't got anywhere near yet, would be the BRICS. The EU, again, made absolutely no attempt. Why don't they form their own exchanges? Why don't they price oil in euros? Why don't they have a gold market? So slow. The EU is more of a regulatory. The US innovates, Japan and China possibly imitate, and the EU regulates. So
That's a good one.
Yeah, well, it's very true. But where is the competition coming from? And are those BRICS markets sophisticated enough yet to put a challenge up? Can they do that? So for me, I think the dollar will remain the dominant currency for some time to come.
Yeah, but we've seen a lot of people have been underestimating it recently,
Yeah.
especially during Biden's this last year. You know, people were slowly shifting away from the dollar. The consumer
They were.
kind of lost faith and trust in the dollar.
Well, in no disrespect to him, he clearly had cognitive issues, and I think it was very cruel of the Democrats to leave him like that for so long.
It was so bad, right?
It was sad, and it was embarrassing. And they had an opportunity to field a strong contender, knowing that Trump's popularity, and they put Kamala Harris up, who wasn't well received whatsoever. So I think the Democrats shot themselves in the foot a little bit there, but I don't want to get too political about it. But yeah, you're right. I think the dollar will probably sustain a bit more pressure, but I can't see it losing its global dominance anytime soon.
Not even in the next 10 years.
No, I don't know where it would come from.
Yeah.
Because even the BRICS are a little bit fragmented now, particularly with the Russian situation. India, very, very strong. but they have currency regulations themselves. They're not exactly in a position to start dictating where a new dominant currency is coming from. So, no, I think the dollar personally will carry on for quite some time. Just my thoughts. I'm not an economist. This is just
no.
my view.
Your thoughts are really appreciated because a lot of people have been going off that, and we've seen Trump been going very hard on the Fed, right? He wants interest rate as low as 1%. Can you believe it?
I know.
That's insane. There's never been a time where the Fed cut rates to 1%, to as low as 1%.
It isn't, but it's not unheard of. The Swiss ran negative interest rates for quite some time, maybe as low as minus 75 basis points.
That's the Swiss, though, not
That's
the
Swiss. I know, smaller economy, but it'd be unprecedented in the States. But with Trump, anything I know. So his way out of it is just getting rid of Fed governors that he doesn't like.
Every time he just rants on Twitter about them.
Yeah.
I mean, you kind of feel sorry for Jeremy Powell, right? He's been hammering him right, left and center.
I know.
Calling him too slow, the enemy of the people.
I know. It's not very tactful or diplomatic,
no,
is he?
Not
But
at all.
that's never going to change.
You've been on the inside of investment banks and brokerages. I mean, your resume speaks for itself.
Yeah.
What do insiders know that retail traders will probably never be told of?
They don't know the dirty tricks. They don't go on so much now because of two factors, really. Any kind of manipulation or insider dealing is basically so difficult because of regulation, trade reporting. You know there was an anomaly, manipulation of order books. I can give you a very classic old type of story of how it was done. I'll do it quickly because obviously we've got time.
Go on, it's all right.
But look, do you remember the old open outcry financial futures markets?
Yeah, I've heard of it.
Everyone standing and screaming at each other in a pit.
Yeah.
Okay. So all the big brokers, they had their floor broker, who'd be a very good broker. He'd be standing in the middle of this bear pit with all these hand signals. And he got his orders from his phone clerk over there who relayed them to him buy and sell signals. Now, they all wore the colourful jackets, so they had all the big orders. And then you see guys in red jackets who were called locals. They work for themselves. Now, they previously worked at these brokerage houses, but they thought, I just want to trade for myself. I don't want to stand here for 12 hours a day. I can just come in, trade and go home. Now, we'll take the London Financial Exchange Life. What used to happen is that this particular big broker, who was working for one of the big establishments, he'd happen to just be very good friends with the guy with the red jacket. And before they came in, he said, look, I'll give you a little signal when I've got a big buy order. And how do I know this? Because my cousin was a regulator at that exchange. He used to be on a balcony looking out for strange patterns. So what would happen? The big broker, it could be the German Bund, the Italian BTP, get to a certain level. He knew he was going to buy a significant amount, and somehow he'd get a signal over to his friend with the red jacket by moving his foot. Everyone else looking at hand signals, nobody's looking at his foot other than his friend with the red jacket, which give him a little indication, I'm going to start buying in a minute. Fella in the red jacket buys his 10 lots of BTP or buns and then stops. And then all of a sudden, he starts buying, market goes through the roof. The fella in the red jacket sells out. He's made his $10,000 for the day and goes home.
Wow.
He's been at work for 20 minutes. And that's what used to go on all the time. All the time. And you hear stories, so-and-so, he was a great trader as a local.
Was he actually?
Was he? No. That kind of thing went on. That's one example. There were all kinds of things going on.
I'm sure.
All sorts of things going on.
I'm sure you've got many stories to share.
We don't have time, but maybe over a coffee one day I'll tell you.
Yeah, for sure.
Yeah.
Do you think the financial markets are actually fair? Let's be absolutely honest. They're designed to keep the retail traders losing.
They've got significantly better. They've got a lot because of regulation and because of a lot more liquidity in the market and a lot more choice for retail traders to find somewhere to trade. Not forgetting 20 years ago, there's no such thing as retail trading anywhere, not really. But now, I think because of regulation, they have to be fair. If you saw what brokers and financial institutions have to report through, we call it MiFID and EMIR reporting, and it is so deep and analysed, an irregularity will be spotted very, very quickly. So I think they're as fair as they possibly can be. The regulators are possibly going to push the markets to a stage where the brokers and the financial institutions think, well, we just can't make any money anymore. Yeah. So, I do. I think they're fair.
And what's your thoughts on the rise of social trading and influencers in finance? Is it a good thing or is it just a scam?
It is. It's both. And it's having the ability to work out who's a scammer and who's for real.
Actually, sorry to interrupt, but now ESCA here.
Yep.
They're regulating influencers. And I just got my financial influencer regulation last week. Here you can see the certificate.
That's a good thing.
So
good for you.
Thank you. So it's a great. They're way ahead of all the other regulators, right?
They are.
Because they're thinking, hold on a second, there is so many people out there in social media. Everyone is giving their opinions and insights and recommendations. No, I want to regulate the market better now, where the consumer can receive better information.
That is a very good thing. I don't even know if the UK is doing that. What the UK was very conscious of was social media influencers getting celebrities, really stupid celebrities.
The Geordie Show.
Geordie Show. Or other brain dead, whatever they are. So, come and trade so and so. And they didn't know what they were saying, and them idiots were following them. Yeah. So I'm pleased to hear about that. That's good. Yeah. So it's identifying the scammers from reality.
But like with social media, it kind of brainwashed retail traders that trading is easy, because most of these influencers out there, they're not actual traders, they're promoters.
Of course they are.
Oh, some of them are scammers. Yeah. Right? And they present trading as a quick rich scheme. Get rich overnight. Trade with me, copy my signals, and you get a watch like this. You drive a car like that.
Yeah. We've got them in the UK. I can name one like that as well. I won't name his name. He's shocking for that. Yeah, turning up in his Rolls Royce and getting out with his sunglasses on. I used to have nothing, and look what I've got now. Yeah, there are a few around like that, but you can't. There's only so much hand holding you can do. People have still got to use their initiative and work.
Yeah, exactly. Do their research.
Do your research.
Don't believe whatever you see in social media.
Exactly. But that's where I think, to a point, the regulators as well. They've got to just. There's only so much cradle to grave you can hold someone's hand. Human psychology is about taking risks, but do your homework. You clearly have got that regulation. That's fantastic. Cheers. But if it smells like, what it probably is.
Yeah. And that's why sometimes we struggle with our own clients, because everybody wants quick money.
I know.
They want to just, I haven't made 20% today. I haven't doubled my money today. No, it doesn't work like that. But sometimes I don't blame them because of what of what they've been told online, right?
And what they've read.
Exactly. And everybody thinks trading is just easy. No, but it's not, is it?
Life isn't easy. Nothing's easy.
Yeah. I mean, if I was a billionaire from trading, I wouldn't even be sat here. I would be in an island somewhere, just relax.
Absolutely. Yeah.
Well, let's speak a little bit about the forex market. Mm-hmm. Is it a legit market for retail traders? Has it become a casino where the house always wins?
The house will always win. And as we go back to one of the earlier questions, that's demonstrated quite clearly in the disclosure banner on with the FCA, for instance, 67-70% lose money. They'll always win. But does that mean you should or you shouldn't get involved with it as a retail trader?
That's the question, yeah.
Again, it's entirely up to you. What's your risk appetite and what's your logic and rationale? Why do you think you want to go? What is it that has attracted you that you want to have a go? Have you done any homework? Do you understand it? Do you know what the fundamentals are behind those currency pairs? What causes movement? Why is the euro going to get weak? Why is the dollar going to get strong or sterling? Exactly. What do you know? And if you can't answer any of those questions, you should probably leave it alone, because it isn't a horse race. It's not a casino. It's not a roulette table. There are fundamental and technical reasons why currencies move.
Exactly.
We know that the algos and the old-fashioned hedge funds, they're trend followers. They'll follow a momentum of whatever the currency pair is going up. The fundamentals, if the Federal Reserve hiked interest rates tomorrow, then the dollar will go up with it.
Yeah.
And don't just enter it blindly. It's tempting, but yeah, it is real. But don't be naive. Approach it sensibly. Do your homework.
I would say do your homework. That's very important.
Yeah.
Be absolutely honest with us. Have you ever seen market manipulation happen right in front of your eyes and you're like,
Yes.
what's going on here?
Yes. Not in foreign exchange so much, but I'll give you a very good example, copper. So between 1992 and 1995, possibly a little bit wider range than that, and you can look at this yourself, the copper market was collared by a Japanese trader called Hanamaka for the Sumitomo Corporation. Now, he had this layer, and we had a metals desk at the place where I was working, a base metals desk. And even there, everybody was blind to it. He manipulated the London Metal Exchange with warrants that didn't exist. He was using layers of all kinds of crooked ways to demonstrate that he'd collared physical copper, that he'd warehouse copper. He took it from, in 1992, from $1,400 per ton. In 1995, I think somewhere like that, to $4,000. So the commercial market, and nobody could work out why. And he had layers and layers of undisclosed warrants. Sumitomo themselves at that particular time didn't have any regulatory obligations to show what the trades were. And again, this was another reason why the regulators came in and started cutting out. Then it all unraveled. He'd been extremely unprofessional and deceitful, and he had manipulated the copper market. You know, you can Google it when we're finished. Hanamaka Sumitomo. Wow. Yeah, so I wasn't involved in copper, but I could see on a daily basis, even my brokers, everything, it was just buying copper. Yeah, that was huge manipulation. Massive.
And that was the biggest manipulation you've seen?
Well, there's a difference between manipulation and fraudulent activity. Well, they're both fraudulent.
Yeah.
But I think another big one that I didn't witness it myself, but I was in the trading environment, was when Nick Leeson took down Baring Brothers. He was where was it? In Singapore. Again, it was just a lack of internal process for auditing, and it was just unbelievably slack. So he opened fictitious accounts. He was over trading, and he'd opened fictitious accounts within Baring Brothers. And then suddenly, after maybe a couple of years of this, the bank realized they had a full audit. He bankrupted the bank. He took down that bank. It was about 200 or 300 years old. Wow. Because of their lack of systems and controls. Yeah, there's another good story to look at. Nick Leeson.
Definitely.
Yeah.
And what would you say the biggest market crash you've lived that made you think this could demolish everything?
Well, that I personally experienced on any given trading day, it was when sterling crashed out of the ERM. So the ERM, it was basically a precursor to the euro, where all the legacy European currencies were only allowed to sort of swing within a range, 6% up and down of their given mid-rate. Now, sterling in 1992, in September 1992, it was weighed against the Deutschmark. I think the central level was 295, and it could go up or down permissibly 6% either way. But it was a completely false rate. It was far, far too strong a level for sterling versus the Deutschmark. It was constantly being pushed lower. The Chancellor of the Exchequer had power over interest rates at the time and rose them to 12%. We had 12%. Could have, overnight, it could have been as high as 16, but we were at 12. He was doing his level best, fighting two wars, trying to sustain sterling in this ridiculous barrier corridor and interest rates. So you imagine having a mortgage at 12% or it'd be even higher. And then I can't remember the exact day, but it was called Black Wednesday. George Soros was instrumental in selling it and pushing it out of the bottom of the range. And the government at the time, the Conservative government and the Bank of England said, we just can't support this anymore. And it collapsed out of the ERM. And it went from 2.6 Deutschmarks to like 2.3, just gone. It was an absolute crash.
Wow.
It's phenomenal. That's another good one for if any of your listeners or your watchers who want to look at some market history of things like that. And so, 1992 sterling crash, witnessed that. Swiss franc appreciation in 2015. These are all good things to look at and find out why they happened. So, that from living history, me sitting there trading when that happened, that was just phenomenal.
If you had to give one piece of advice to young traders watching this right now that could save them years and years of mistakes, what would it be?
Discipline. Again, we kind of covered a lot of those points. Don't be hasty. Have a reason for, and there's one classic. If you've entered into a trading position because you've done your research and you knew what time frame that you had available to you, and you did your research, you knew that there was a technical support level there and it was going to break through, so you bought and it got there, and you made money and you got out because you'd studied hard. Great. Close your laptop, go and have a cup of tea, go for a walk in the park. Don't enter into a new trade that you've done zero research into and lose all your money.
Just because you want a revenge trade.
Yep. Just you made that money through research, and now you're making another trade through doing no research whatsoever because you're getting greedy. Don't be greedy. Work out how much you'd be happy with on a daily basis, and if you make it, that's it. Close your book. Go out, have a cup of tea, go for a walk, meet your friends.
Absolutely agree.
That's it.
Knowing when to stop is more important than knowing when to start.
I've seen people throw money away on a daily basis for no reason whatsoever.
It's psychology and discipline again. Just going
it's
back
frustrating. I used to sit next to one guy in particular who did it every day. I said, why do you do this day in, day out? You got lucky on the winning side because of the market moved in your favor. You hadn't done any research. Now you want another go with no knowledge of what's going on whatsoever, and you're just constantly losing money. So, just be disciplined. That's it.
Very true. Knowing when to stop is
knowing
vital.
when to stop.
Right, like it doesn't matter whether that's a win or a loss.
Yeah.
Okay, I've hit my daily target. That's it. Thank you. Just like you said.
Yep.
Close the laptop. Go on a walk.
Go for a walk.
Yeah. Whatever suits you. Whatever floats your boat. Right.
I was just going to say the exact thing. Whatever floats your boat.
Don't be greedy. Just knowing when to stop, whether it's winning or losing, is vital.
That's
right.
It.
Yeah. Richard, you've just given us truth about trading. I absolutely loved my time with you.
Anytime.
And I hope we can have another opportunity to do part 2 with you with more.
Yeah, we can do anything you like. Oh, it's a pleasure. I enjoy. Do you know what? Whenever I go to an expo, I probably spend too much time not telling them what they should buy and sell, but just give them some experience, how not to make mistakes, and teach them about being disciplined. I do have a natural sort of mentoring sort of nature about me. So I'm more than happy to...
No, you're very great, Richard, and your experience and your resume speak for itself. Thank you again.
Pleasure.
For giving us the time, and I really appreciate your time, and we'll definitely need part 2.
Part 2.
When the next big market shock hits.
Part 2. Who do you think is going to play me and you in the movie? George Clooney will do for me. There you go. It's been a pleasure.
Thank you very much for your time.
Pleasure.
We've reached the end of this podcast. If you like this content, here is more, and please share in the comment below what's the hottest take for you from this podcast, and if you like to see Richard again for part 2. That's it from me. Please do not forget to like and subscribe to this episode, and I'll see you soon. Thank you. Peace.